So we are going to be talking about options once again. However, this video is going to be strictly focusing on the terms. So I was getting some questions in regards to the different terms when it comes to options. So in this video, we are going to cover strike price, exercise option, rollover, and close. So if you haven't already, go ahead and hit that like button. If you're new to the channel, go ahead and hit the like and subscribe so you can join the team and you'll get some notifications every time I post a video. Oh, but make sure you turn on the bell for that. All right, let's get into this. All right, so first and foremost, we got the strike price. Now, remember in the last video that I made on options, I was mentioning to you the strike price, which is right here. This is completely separate from the actual cost per share of the stock that you're looking at. So just for example, in this situation, we're looking at AMC. All right, now as you can see, AMC has a bid or had a bid of $25.63 and an ask of $25.65. You can see that over here. So these are the bids and the asks. This is the strike price. Now, whenever you're trading something, you want to look at the strike price being the target. So if you think that AMC is going to go to $30, then you're going to look at the bid and the ask over here for each option. So remember, the strike price is your target. All right, if you think something is going to go to 30, or if you think something is going to go to a certain amount, that is your target. That is the strike price. When you look down the option chain, you're going to see your strike price, and of course it's going to be correlating with the option chain you choose, like depending on the week that it's going to be set to expire. So you've got June 4th, June 11th, so on and so forth. It's basically every Friday. All right, so just for this one, we are looking at the June 4th expirations. So you've got $30 here as your strike price or your target. So now your bid and your ask is $3.40 or $3.45 per contract. And keep in mind, each contract has 100 shares. So you're not just buying $3.40 and saying, oh, I'm gonna own AMC for $3.40. No, you're gonna buy a $3.40 contract. Each lot consists of 100 shares. So technically you're paying $340 to own one option or one lot at the $30 strike price, and this will continue to climb the closer that it gets to your strike price. So once this $25.63 or $25.65, once that comes up to like 28, 29, or 30, then it's good. You keep making money on the move up. But keep in mind, this has time decay because it's options. So the closer that it gets to June 4th, the more, the quicker that the price of your bid and ask will also start to go down because of time decay. So it gets less the closer it gets to its expiration. So keep that in mind. You can make a lot of money on the run up the closer that it gets to the 30. And then of course, once you're in the green or once you're in the money, then your strike price is going to be up here in the purple rather than down here in the black. Because right now it is still out of the money. Once the stock price reaches 30 or above, then 30 will become in the money. Okay, so this is your strike price. That is what that means, and that is how you trade it based on long call options. All right, now let's move on to the next one. Okay, next one is to exercise your option. This is something you can do when you are already holding options, and meaning for exercise is saying that if, for example, AMC, let's say I have options for AMC. Now, if I want to exercise my option, that means I want to buy my options out. So if I have 10 lots, okay, let's just say 10 lots of AMC, or in this case, 5 lots of AMC at a $28 strike price. And I'm thinking to myself, you know what, I don't want to wait until the expiration. I have a high conviction that it's going to hit $28, so I want to exercise my right to own the shares. So remember, if you have 5 lots of, or 5 option calls at the $28 strike price, that means you have 500 shares. Okay, and 500 shares at $28, well, you do the math, you're gonna have to buy that out. So anytime you're doing options, if you want to exercise your right to own the shares, you can do that. All right, and then just make sure that you have enough funds to do that, because I know a lot of people, especially those who have Robinhood, you can do options trading with, I believe it's any amount. So if you do wish to own the shares that you're trading options with, that's how you do it. You exercise, so you can click here, you can do exercise your options, and then you can go ahead and confirm and send, and that way you will buy 400 shares or 4 lots, just depending on how many lots you own of any particular indice or any particular stock. Okay, so let's go on to the next one. Okay, next we are going to be talking about rollover. And I'm not talking about your pets. In this case, rolling over simply means you want to continue holding your option chain past its current expiration period. So if you have June 4th expiration, obviously you don't want to hold something. If it's a Thursday, for example, and you're trading it to Friday, that's fine. But if you feel that the current stock you're holding options for can reach a certain price target and you don't want to let go of your current holding, rather than waiting until midday Friday or the end of the day Friday where your options can expire worthless, you want to roll it over so you can continue trading it and hopefully profit from it the following week or the next couple weeks out or months out. Or if you want to do a leap call, you could do that a year out, up to you. But that's essentially what rolling over or rollover means. You're simply taking a June 4th contract, just as an example, and you're switching it over to a June 11th contract, or you could switch it over to a June 25th contract. Just depends. All you're doing is really buying time. So if you have ever held options, you know that on the Friday or the week of the week for your options expiration, it will go worthless. So you do not want to hold something on a Friday. You typically want to get in and get out within minutes if you can, if you are going to be brave enough to trade options on a Friday for that particular day expiration. Best thing to do is obviously trade something the following week out or a couple of weeks out. But if you are holding something from a Monday and now it's your expiration date and you still feel like it's going to climb, then go ahead and roll it over to the next week and you don't have to worry about buying a new option chain. All right, so that is what rollover means. Let's go to the next one. Okay, and for the next one, and also the last one on this list, is going to be my favorite, close. Closing an order. So this is when you finally made your money and now you want to get out of your position. All you're going to do is right click, create a closing order, and then you can sell your options. Now, whenever you're doing this, obviously you have a limit order, you could do a market order, you could do any kind of order here. I prefer to do a limit order unless you're trading something which is extremely volatile, which you will notice AMC and GME are probably two of the most volatile stocks that you can trade. And I believe on Friday, AMC traded over 600 million shares. It was actually closer to 650 million shares. And AMC doesn't even have that many shares. So it was extremely, extremely volatile. So in a case like that, I would rather do a market order. Another trick that I always do when it comes to selling stocks, which you guys have probably, if you have seen my other videos, I've mentioned several times, set a higher price. So for example, just using this as an example, instead of selling it, if the price for the, right now it's at $3.80, I would set a sell at $4.50 or $5. Once I see the price is moving up to $4.50 or $5, and I would check to see where the volume is, I check to see how fast the stock is climbing or if it's slowing down, and then I keep my setup just like this. So I already have it set, but then once I see it coming close to like 425, 430, if it's still pushing real strong, I'll keep holding it. If it's not pushing, if it's showing that it's starting to consolidate, if it's showing that it's starting to hit a level of resistance, I will then change my price to whatever level it's at, 425, 415, just to get out of that order. I do not like to use a market order because you don't know if that market order is going to put you back in at 390 for the sale. So you're not going to make much. All right, so that's what closing the order means whenever you are trading options. Okay, so you've got close, you've got rollover, you've got exercise, and you've got your strikes. These are the 4 key terms when it comes to options. Hopefully it helps. Hopefully you guys all trade safe. I know everybody's itching to get back into the market tomorrow, but unfortunately, it's another holiday. All right, but enjoy your holiday. It's a Memorial Day, so make sure you guys spend time with your fam or do whatever you got to do, but sometimes a holiday is good. Stay green, and I will see you guys in the next one.